making this whole development a bear trap. Why? Because price took out buy-side liquidity, then it dropped, it took out sell-side liquidity into bullish PD race, and after that, it left some clear bullish signs. You guys know that I mainly trade euro-dollar, so in this one, I really wanted to go over and talk about the higher timeframes and how we predicted this whole movement with our community, how we saw their price is going to react to, when it's going to reverse, what it's going to seek for, and everything else. There was a reason behind literally every move on this chart, from when price took out this low right here, rejected a specific area that we are going to talk about, then took out this high right here, started giving this bear trap type of a formation, and pushing to the upside again, which is something that we saw coming miles away. So let me quickly show you how we came to that conclusion, how we saw what puzzle pieces are in place for us to have this clear vision, and what were the key factors behind everything. So now the whole foundation started on the monthly time frame right here. So I'm going to focus only on the key puzzle pieces, not going to dig into specific details that are not necessary regarding what we are going to talk about today. So now one thing that I want to mention right away is that price doesn't move in absolute straight lines. It will always give some tiny pullbacks, even if it's very one-sided market. But in most cases, what we will see, price taking out one liquidity level, then going lower, giving a proper pullback, going for another level, running some sell-side liquidity, and into opposing bullish PD race that will cause a deeper pullback. Price will continue dropping until it drops into a big enough liquidity pool and opposing PD race that will eventually cause not just a reaction like in this case, but a full-on reversal. Then you really understand the foundation and you saw a million examples and you know a pair that you're trading inside out. This is when usually it becomes a lot easier to know and predict specific movements. So now what comes to euro dollar right after price took out this buy side liquidity right here, and we saw this candle close leading a BPR, and BPR is again in this case bullish imbalance right here filled with bearish imbalance. So this whole range from this low to this high, this becomes a BPR. Once this candle closed, and this is October's monthly candle, this is exactly when the tower team, they started focusing on this round formation, this low resistance sell side liquidity right here, pushing towards this low right here and this low right here as the main draw on liquidity. Now, why is that? Is because firstly, price was rejecting this major imbalance point right here. Notice that we had one rejection, second rejection, third rejection, fourth rejection, and price ended up leading a DPR away from this area. What DPR means is movement, is momentum. And when we have displacement and clear levels below, this is then usually we can expect for a deeper move to take place. And this is exactly what happens in this case as well. So price not only moved right back into this bearish imbalance that was already a very sensitive area, it also ran a buy side liquidity pool right here. Another thing that you want to pay attention to is this wick right here. From the high to the very low, if you measure that using Fibonacci tool, the range, this is the midpoint. Notice where price stopped right here, where the bulk of the volume stopped. It was right at the mid of this wick right here, which was again aligning with the fair value gap, and it also ran buy side liquidity pool. So this caused price to eventually start reversing. We didn't know that it's going to happen until price here on the monthly time frame ended up confirming our vision and showing displacement by leaving this BPR. So in that situation, we already had all the puzzle pieces nicely aligning, and this is when we started focusing on the sell side liquidity pools, because again, this is a monthly time frame. So now why this level right here was one of the main sell side liquidity pools? Because it was a fake low. And what I mean by that fake low is whenever we have a clear P-Dairy, let's say imbalance, and price comes very close to it and starts pushing away. More often than not, this becomes a fake low, fake structure, because price didn't actually reach into the P-Dairy, and it eventually acts as a major liquidity pool. Price will reach into it before either reacting from that area or fully reversing to opposing side. So this is exactly where our eyes went, right to this bullish monthly imbalance right here that wasn't filled, and notice that price right here came very close to this bullish monthly fair value gap, but it didn't reach into it. It ended up running away. Then we had this consolidation right here, and everything added up to this what we talked about right here. So price ended up dropping into this area. It ran our target 1 right here, then it went for the target 2 right here. All of these months we were focusing on bearish opportunities opportunities, trading away from this area towards this fake low and high of this monthly bearish fair value gap, as well as the consequent encroachment. So now let's put consequent encroachment, which is simply a midpoint of the fair value gap. So this is where it is right here. Our main area of interest again was this sell side liquidity here and the high of the monthly fair value gap. Eventually, if lower time frames keeps aligning for shorts, we wanted to see price drop into the consequent encroachment, but that was the furthest area for us before expecting for a potential retracement. And now when price dropped into it and we started seeing weekly daily start aligning, rejecting this exact level right here, this is when we started looking for a potential daily run higher, showing a reaction. Because notice what happened here. Price ran a lot of sell side liquidity, interposing bullish PD rays, and not some random higher time frame PD ray. It is monthly time frame, and monthly time frame is one of the strongest ones. This is exactly why from this point and the consequent encroachment, what we started looking for was for a potential retracement reaction into monthly bearish fair value gap right here, into this lower here to be exact, which is at 1.06298. So this is the level that we are focusing on regarding if the lower time frames, daily time frame and weekly time frame bottoms out away from this consequent encroachment and starts climbing higher, this becomes our area, and this lower here as the main draw on liquidity, and all the smaller buy side liquidity pools, like let's say in this case January's high right here and other smaller liquidity pools. So now dropping to the weekly time frame, what we had right here, first thing that I want you to notice is how nicely price rejected monthly bullish fair value gaps consequent encroachment, the midpoint. Notice that bulk of the volume bodies of these candles rejected it to the absolute dip, and only wicks dropped below this, showing that this is a really sensitive area and that we want to pay attention to it. From this point, what we had was price running even more recent sell side liquidity right here. It took out this fake low right here, then it took out this sell side liquidity right here, dropped into the consequent encroachment, started pushing higher, but again we wanted to see more price action. We wanted to see price actually bottom out in this area and start climbing, showing proper higher highs and higher lows. So from the weekly perspective, this is exactly what we are seeing right now. Price ended up even spiking into the consequent encroachment one more time. Again, closed this weekly bullish candle, and after that we even had another bullish weekly close right here. So now of course we are never 100% sure that price is just going to keep on rising higher into this monthly bearish fair value gap that we just talked about right here. Again, nothing is never 100% what comes to trading. Overall, we can easily see price just get stuck in consolidation, and either FOMC or NFP just gives this massive quick rally that we won't be able to even trade in the first place. But it's not about that. It's about understanding the vision, understanding where price is at, what it's reacting to, how the higher time frames are looking, and this is when you can frame entries in alignment with the higher time frame pressure. And this is when you trade in a high probability environment, meaning that automatically your strike weight is going to be higher as well. So in this case right here, there was a very strong reason why me and our whole community either looking for long opportunities only inside of this range right here, because we knew that price is now ran some major sell side liquidity pools. It's bottoming out, it's rejecting and reacting to this specific area, this specific monthly time frame bullish bid array, and that the current short-term draw on liquidity from the higher time frame point of view is this magnet area right here, this monthly bearish fair value gap flow. So again, automatically we came up with smaller buy side liquidity pools on the way, which are these two right here. So obviously, ideally, we want to see lower time frames stay in bullish alignment and keep on pushing to the upside towards this monthly bearish fair value gap flow right here. Whether that's going to take place or not, it's not yet clear. Again, we will need to see more confirmations, more price action, but overall, everything's looking nicely. And they already banged some neat longs inside of this area as well. So now drop into the daily time frame, what we have is even more clarity. And if we would frame these specific levels, what this is right here, this is previous week's buy side liquidity. And what we have right here is January's buy side liquidity. The monthly candles buy side liquidity right here. Jan is high, buy side liquidity at 1.05333. So now obviously when we have one major drawn liquidity, the low monthly bearish fair value gap, we will always have smaller buy side liquidity pools on the way. So now again, I don't want to say that price is going to just pull back and keep on going higher, but that's the main vision. That's the ideal type of development that we want to see. But we already took a good piece out of this development. We already banked some longs here. We banked some longs here as well. So in other words, we already took out a decent piece of the pie from this whole development. But if it continues and we see price retrace towards this bullish daily time frame or the block, these consecutive 3 downside candles right here retrace into this bullish fair value gap as well. Give a quick dive lower, reject bullish P raise, lower timeframes get in alignment, and we start seeing previous week's high buy side liquidity taken, January's highs taken, and price continue towards the main magnet area right here. That's the ideal vision. If everything aligns for that, perfect. If not, then obviously we will have to stay patient and adjust and adapt to the whole situation, because that's what trading is. We build our top-down vision. We see where the price is at right now, what levels it ran, what PD race is currently rejecting, how the whole monthly, weekly, daily time frame alignment is looking, how the lower time frames are aligning, or are they in sync with the higher time frames or not? Where is the main draw on liquidity at? Where are the smaller draws on liquidity at? Where are the sharp structures forming from? And the sharp structures that I'm talking about are all of these lows right here, with these massive wicks shooting to the downside as well, showing clear pressure to the upside, and not from some random place, but it is monthly bullish rally gaps, consequent encroachment. So looking higher, we clearly have buy side liquidity pools resting above. So that's exactly what we need. Read the structures correctly, read the price action correctly, and be on the right side of delivery, the right side of the higher time frame pressure and momentum. More picture what happened here on the daily time frames and what we looked for. And then price ran more sell side liquidity here. Notice that once again, even on the daily time frame, bulk of the volume stayed right on the monthly bullish fair value gaps, consequent encroachment, the midpoint. Notice that only wicks right here dropped below this 50% of the imbalance and ended up closing, rejecting this area. So that was another sign that we likely about to shift higher. What we had from that sign was this strong high right here that formed on the 30th of December. Why we had it marked is because notice it ran some buy side liquidity into bearish fair value gap right here. And what it makes this high, this whole situation, it makes it a strong high. So everything that happens inside of here, yes, we can be a little bit more aggressive and trust our whole vision. That's exactly what we did actually. But the main actual understanding that price is bottoming out and price is possibly about to shift and go higher was once price actually fully took out this high right here. Then obviously what we saw was this imbalance point right here and not some regular imbalance point. We can hide this monthly bullish fair value gap to not make the whole development too messy right here. Notice that what we had was fair value gap. So then price was here and it left some consolidation right here. And I'm talking about all of this sell side liquidity here. What we started focusing on right away was for price to head higher and then retrace into all of these opposing bullish PD race right here, bottom out and shoot to the upside, making this whole development a bear trap. Why? Because price took out buy side liquidity, then it dropped, it took out sell side liquidity into bullish PD race, and after that it left some clear bullish signs, even tagging this monthly bullish fair value gaps, consequent encroachment again, and then pushing to the upside. That's exactly what we've been looking for right here. Now this bullish fair value gap, notice how it was rejected here. Price ended up dropping a little bit lower on the second time, but that's exactly why we stack confluence. What we had right here was a bullish order block here on the daily time frame. What we had in this area as well was a very clear BPR, bearish imbalance filled with bullish imbalance filled with bearish imbalance. So not just a regular BPR, because we had even more confluence. So we can mark that and notice that overall we had this clear area stacking bullish PD race. We had this nice bullish area right here. Price after rejecting the consequent encroachment of the monthly bullish fair value gap, giving this bear trap type of a formation, taking out strong high right here, pointing at a potential ship as having a clear drawn liquidity right here. Once price stayed this clear bullish area and rejected it a couple times, starting to push to the upside, again, this is when we started focusing on the long opportunities only. We did the same thing right here, but it was short-lived. Price ended up dropping lower and rejecting this whole bullish higher time frame area one more time before continuing to the upside right here. So this is how we successfully predicted this whole move right here, this move, and even this move. And now, again, we are looking for a potential continuation here. Whether we are going to take it or not, it's not yet clear. Obviously, we will need for lower time frames to stay in clear alignment. We will talk about lower time frames in more detail in the near future video. But for this one, that was all that I wanted to touch on. I hope it was insightful, as I got so many DMs from you guys asking me to run through Eurodollar higher time frame vision, why and how our whole team been looking for bullish developments in banking all those clear long opportunities. This was the whole higher time frame foundation behind everything. So again, I hope you enjoyed this video. I hope you learned something. I hope it was insightful, and we will talk very soon.